This video is a follow-on from the previous 30 videos dealing with price in the precious metals markets. If you haven't seen those videos, I'd recommend you doing so before watching this one. In this video and the next two videos, I'll talk about two real-world examples of hyperinflationary events. The mark in the Weimar Republic of Germany circa 1923 is an often cited example of a currency which has undergone hyperinflation. So let's look at that. For those of you who don't know, the Weimar Republic was the ruling body in Germany during the interwar years. It came into existence after World War I in 1918 and ended in 1933. The origins of this sad story, though, start before that, prior to World War I. Wars are costly, so in order to meet the expense, the German authorities knew that they needed money. War bonds were issued, investors lent money to the German state by buying the bonds, but the funds raised were insufficient to meet the requirements. The German authorities were faced with three options: sell some of the nation's gold holdings, raise taxes, or borrow. They chose the third option. They didn't finance the war by means of raising taxes, as has happened in France and Britain. But at least they were smart enough not to sell their gold. The German authorities believed that they could finance the war by borrowing because they thought that it would only be a short war and that it would be a war that they would win. The problem was they couldn't borrow the sums they wanted with the gold standard in place. The gold standard acts as a restraining mechanism, serving as a curb against government spending. If, however, the gold standard were suspended, then there would be no restraint. So the government of Germany suspended the gold standard when war broke out. At that point, the mark became an unbacked fiat currency. Big mistake. Indeed, you could say it was a fatal error. This was when Germany set itself on the road to ruin. With the gold standards suspended, the German government, in cahoots with the central bank, could then print all the currency that they desired. The money supply ballooned. The amount of currency in circulation in 1917 was 5 times greater than it was in 1913. Consequently, by the end of the war, the mark had lost half of its value. Bear in mind that inflation is defined in classical economics as an increase in the money supply, although more correctly it should be referred to as currency creation. So we can restate this by saying that the primary cause of inflation is excessive currency creation or an increase in money supply or money printing, whatever term you want to use. Nothing in this world is free. There's always a cost, and the cost of excessive currency creation is the devaluation of the currency. In economics, everything is relative, so the value of something is regarded in relation to something else. Essentially, what's occurring is that the currency is losing some of its purchasing power in relation to products. Prices rise because it takes more of the currency to buy the same products. I should also mention that new credit institutes were set up and people borrowed heavily from them. This further added to the money supply. As we all know, Germany lost the war, and in accord with the Treaty of Versailles, it had to pay war reparations to the victors. So they had huge reparations to pay in addition to the debts accrued to fund the war. Other things occurred which added to the problems Germany faced: Allied occupation of the Rhineland, territorial losses, political instability, workers' strikes and mass protests. These things had an impact, but talking about these would take us off topic. Suffice to say that Germany's socio-political and economic woes worsened as time went on. The problem was the post-war economy was in a pretty parlous state. Germany's economy might have been strong before the war, but the war had taken its toll. The bottom line was Germany wasn't in a position to pay the debts, so the German authorities started to print even more money in order to service the debts. Inflation went up as a result of the money printing. A vicious circle tends to come into operation at this stage. I shall talk about one aspect of this. Prices for goods and services go up. So, workers on fixed incomes demand wage increases. This is inflationary because any wage increases are passed on to the consumer in the form of higher prices. This pattern repeats. It's a negative feedback loop. The German authorities didn't only print money to service the national debts, though, but also to get foreign currency to pay the war reparations. Over time, the mark lost value against other currencies like the British pound. In 1913, the British pound was worth 20 marks. At the end of 1918, a pound was worth 43 marks. 1 year later, the pound was worth 185 marks. In April 1921, a pound was worth 268 marks. As compared to the dollar, in 1914 a dollar was valued at 4.2 marks. At the end of the war it was 7.9 marks. In the first half of 1921 a dollar was worth 90 marks. In early 1922 it was 320 marks. Many ordinary German citizens exchanged their marks for foreign currencies to protect their purchasing power. In 1921, the mark was in big trouble, but by the end of 1922, a dollar was worth 7,400 marks. The mark was essentially in freefall. Indeed, you could say it was in terminal decline. As a side note, seeing what was happening, in January 1923, French troops marched into the German industrial heartland, the Ruhr. They did this to secure hard assets such as coal in lieu of payment. This obviously didn't go down well with the German populace. It was a source of rancour which added to the general malaise. I split this topic into a number of videos, so there's another 2 more to follow. In the next video, I'll continue to talk about the Weimar Republic. Wise up and rise up.